How does FinTech enable smoother compliance? Okay, I think a good way to break up the question is to break up Fin and Tech. So I'll start with the latter and start with Tech first. And for me, the biggest change, as I said earlier and emphasized, is really to make the mundane, the day-to-day easier. And for me, that's going more digital and relying less on paper. And what that does is also it creates more data. And with data, you can do a lot more. So you can do automation, you can do smart contracts that are self-executing, and so on. But I think what the more interesting side of the question is how this has a wider impact on the industry. So that's the Fin bit of FinTech. And it can come in one or two ways. It's obvious. If you think about compliance, compliance is a cost. So if you become more efficient with compliance, that lowers your costs. And an optimistic view is that will get passed on to consumers and customers down the line. And if you do that, then it might have a knock-on effect across the industry to as a stick a little bit to make the incumbent financial institutions more conscious about their regulatory compliance and also become more efficient. Another possible angle that I see potentially having a good impact is from a regulatory perspective. So through regulating FinTech companies or companies that use more tech, it could be that regulators find new ways or new requirements for regulating something that has already existed for a long time because there are just new ways of doing things. So from a regulatory perspective, you could have a change in the regulatory framework policies, and that could have also a significant impact on the overall compliance costs for firms across the board. I think regulatory sandboxes in particular are interesting, but given that most sandboxes only came into play towards the end of last year and this year, it still remains to be seen what lessons can be learned from these sandboxes.